Good afternoon, Outliers. How are y'all doing today? Hope you're having an incredible Monday, an incredible start to the week. We are almost to Thanksgiving week. So to do a little housekeeping real quick, Friday is iffy. They're having like a Thanksgiving celebration at my son's school. I think I could be back in time, so we're going to keep it. But if not, I'll let you know in the Discord. Next week, I'm out all next week. So just plan your calendars for that. Also, got some new glasses here. Gonna announce that before y'all start questioning it. So yes, did get new glasses. But you know what? It is a great start to the week. Hope you're having an awesome day. Dave, good to see you. Peter is here. Jason, good to see you again. Bob, howdy. Jean-Louise here. Michael's here. Wes is here. Donna's here. Mike is here. Jorn is here. Man, everybody's here today. You know who else is here? In 2016, my number one reason for wanting to vote Donald Trump was that he was going to run the government like a business, right? Come through and clean out all the chaff, clean up all the waste, make things more efficient, like it would in a business, right? That was my number one reason. Now, I wouldn't say that he accomplished that so much in his first term, but he's already making sure that he does accomplish that in his second term with the DOGE, the Department of Government Efficiency. I'm really excited about this, right? Now, I will say Elon is far too busy, right? Running Tesla, SpaceX, Twitter, about to be DOGE. I don't know how he can devote everything to everything. So I don't know if I love that so much, but I do appreciate the fact that he's just like, let's go let that sink in, I guess you could say. So let's watch this quick video and see what they're talking about here.
The newly minted Department of Government Efficiency, DOGE, expected to lob a shattering blow at federal bureaucracy and redundancies. Elon Musk and Vivek Ramaswamy both tapped as co-leaders. Listen to this.
Over $500 billion that's spent every year right now was not even authorized by Congress in the first place. They can't even tell you where it goes. We've talked a big game for 40 years about cutting the federal government, about reducing the scope of the federal government. Politicians haven't been able to do it. And so Elon and I, we're not politicians. We're businessmen. We're coming at it from the outside.
Which is exactly what I haven't watched this yet, so this is cold. That's exactly how I've been feeling, right? And I've said this many times. My top two voting. The top two things I need to say when I'm voting, I don't vote parties. I vote for more freedom and less taxes. And that's, what they're trying to accomplish here is less government intervention.
Side.
Mr. Wonderful, Kevin O'Leary is the chairman of O'Leary Ventures, and he joins us now. So, Kevin, back in 2010, the Simpson-Bowles Commission proved that it's not hard to find waste, fraud, and abuse in places that cut spending. What's hard is getting Congress to go through with it. Is that going to be any different this time around?
Yes, it will be different. What Bowles didn't have at that time was the megaphone Elon Musk has. You got to remember, politicians have to raise money. These days, they do it using social media. Now, what Elon has, and people keep forgetting because they say, well, he doesn't have a legislative mandate here. And I say, oh, he's got better than that. He's got X. So what happens is you're in some state somewhere and you own a project to nothing and you're spending $2 billion. He just will shame you out. He'll start naming to all of your voters exactly what you've done wrong and what you're not doing to fix it. And I love the concept of just squeezing heads to stop waste, because all he has to do is turn on the machine. Now, it's going to be very contentious. I've said this multiple times about this mandate. The power he has is not to be underestimated, because if you can get to the voter of that governor or that senator that's wasting money in his eyes, and he can make a good case on X, you're going to cause a lot of damage in that constituency. And I love this idea because it's a negotiation. That's what it is. If you don't fix this, I'm going to call you out.
Yeah, the $44 billion he spent on X might seem like a bargain in the long run if he gets to leverage it like that. Here's a breakdown of federal spending, just so that folks at home know where their tax dollars are going. Healthcare, 25%, Social Security, 20 to 25%, defense, 13 to 15%, safety net programs, 10%, interest on the national debt, 8 to 10%. The way it breaks down is 61%.
The fact that it's 8 to 10% national debt interest, that's not good. That's not good.
Of spending is mandatory. 13% is on debt service. 26% is discretionary, which really will be the target of DOGE. And that is a small piece of the pie to try to wring $2 trillion out of, Kevin.
I don't know. I think healthcare could be another place of savings. We haven't really used any technology there yet. We haven't really digitized medical records. We really haven't brought a mandate of AI into that. I think we could save a lot of money. The U.S. has one of the worst term IRR returns on healthcare spending when you can compare it to some of the European countries like Switzerland or England or France. They do a much better job, but they share the records on a much more ubiquitous basis that we do. We're always concerned about privacy, but I think we could fix that too. But I like looking at everything. I don't see any reason why these two can't just release the hounds and go nuts. Everybody's interested to find out what they're going to see.
That's okay. Dude looks like Mr. Burns, right? Hang on. Are you telling me that this guy and this guy do not look similar? And he just said, release the hounds. Okay, that's pretty hilarious to me. But yeah, to his point, there's a lot of waste. We all know that there's tons of waste that can be cut, and I'm looking forward to seeing that happen. Number one best thing that we could do right now, in my opinion, is to cut all of this awful waste. Tug is here. Good to see you. Mikey Mike says, our healthcare system is dreadful. Oh, I know. Peter says, Jean-Luc Picard. Yes, he's running Star Trek over here. All right, let's do our market analysis. All right, welcome to the Outlier Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using the outlier data. I call it the golden ticket trading strategy. So real quick, how does OVTLYR work? It's a 4-step process. OVTLYR monitors how investors are reacting to changing market conditions, news, price movements, and the economy. OVTLYR determines if investors are acting irrationally fearful or greedy, and by how much. It gives buy and sell signals when those irrational behaviors reach an extreme. And number 4, allowing you to get into the stock before the outlier move happens. So let's do our member highlight of the day. Okay, so let's jump into the Discord over here. And I saw that Mikey Mike is updating his library, getting the Ultimate Trading Risk Guide by Steve Burns. Pretty sure I read that one. As you know, Steve is a close friend of mine, so excited to see you picking those books up. He really makes these books accessible, makes them easy to read. And the way that Steve told me about it, he's like, look, I write these books because I want to write the book that I wish I had when I was reading the books, right? Have the book that I wish I had when I first started picking up trading. So that's a good pick right there, Mikey Mike. Jason was asking about pricing. So everything in OVTLYR, it's all the same. It's either annual or monthly. We don't have any other tiers or anything like that. You save tons of money going annual, of course, but monthly is there's no difference between the two as far as access goes. And then Bob, hang on, let me make this bigger here. Bob was asking Mahesh, is it possible for you to discuss at some future convenient point in time how the oscillator differs from the heat map? Ooh, okay, that's a good question. In fact, I did ask Mahesh and Mark if we could come up with some better representation of what these are inside the platform. I'll show you what I mean once this gets loaded in. Sebastian, hey, Wes says, release the hounds. Excellent. Okay, so in the platform here, in this recent update, we did have the blue oscillator behind the chart, and it looked like a moving average. But now that's brought out as its own item right here. So I did ask if we could have some sort of container around it, maybe a block, but as well as like maybe high and low points, kind of like this has this 75, 50, and 25. And then the heat map here has its own thing. This is definitely an area that we're trying to improve the usability on. But to talk about these, right? So the heat map, going back to how OVTLYR works, it determines if investors are acting irrationally fearful or greedy, and by how much. I mean, that's legitimately what you're looking at here on the heat map. So if they're acting ultra greedy, that'll show up here in the dark greens, or if they're acting fearful, it'll show up in dark reds. And then the price trajectory oscillator, the blue line right there, is that's our prediction of where price is headed, right? So if price is moving, or if the oscillator is moving up, our prediction is that price is going to continue to go up. So there's definitely much more to it than just those two quick explanations. We did have some explainer boxes up here in the 2.0. I did let Mahesh know that those are missing, so those should be coming soon, and those have additional explanation as to what the all the different indicators are. And then I did see over here Mikey Mike talking to Jason, talking about learning and watching while having some fun at the same time. So glad you guys are here. Honestly, I hope that you are learning a ton, because I'm trying to share everything that I can, especially in the days where I'm not trading. So of course, be sure to share your stories in the Discord. Let us know how we can help you. And the first rule of OVTLYR, tell everybody about OVTLYR, right? Hit the like button, and that tells YouTube to tell everybody about it as well. Now let's get into the market here. On the SPY, if we're going to go long, I want to see the 10 over the 20, price over the 50. Now the market can change quickly, right? Just in the last handful of days, you saw a super strong bullish trend get kind of wiped out. And now it's sideways at this point here, right? From the election to here, it's sideways. But key point here is it closed under the 20 period moving average last Thursday. Now that is one of my big rules here. If it closes under the 20, don't put on any new trades until it closes back over the 10 EMA. And it has not done that yet. But let's take it a step further and say that it is over the 10 EMA. Just for example, let's say it is. Let's take it a step further. If we go to the market breadth, I did see, just checking it out this morning. I like to look at the market breadth when I'm having my coffee in the mornings. I find that super fun to do, because I'm a nerd and things like this are fun to me. So the financials, healthcare, industrials, staples, and communications have all turned bearish. That's like half of them, right? There's 11 sectors, and 5 of them just turned bearish in the span of a couple of days. The market, if we zoom in, slam this all the way to the right, and then add the 10 EMA, you can see it definitely looks like it may have hit a short-term high as far as the number of stocks on the bull list go. And if I go to the bull list here, I saw a interesting note this morning. Oh, Jason said Mahesh helped him out. Very cool. I did see an interesting note this morning. This is how the market breadth actually came to be. Was Mahesh and I independently, we weren't talking to each other. We were noticing this on our own, how trades were working more as the bull list was growing in number and less when the bear list was growing in number. And so I was like, we needed an indicator for that. So that's how the market breadth indicator was born. But the bear list has 69 sell signals today. The bull list has 11 buy signals. So the tide definitely has turned on that. But the 10's over the 20, prices over the 50. So this is considered a weak bullish trend right now because it is over the 20 EMA. It's still technically bullish, but a weak trend at the moment. So I'm definitely not going to be putting any trades on today. It's unlikely that we'll see a turnaround by the end of the week. It could totally happen, right? I mean, honestly, it takes one big strong day to push up here, and then you've still got half of the sectors bullish, and it might come through. So you have to take things one day at a time, okay? Don't put your assumptions on the market. Just let the market tell you what it's doing. That's what I always say. Listen to the market. Let the market tell you which direction it's going. Right now, as of right now, right? This could change tomorrow. As of right now, sideways, I'm not touching it. But there's definitely tons that we could still do today, like jump back into New Trader, Rich Trader on chapter 10. So this goes back to what I was saying earlier. Steve Burns is a great friend of mine, wrote this book, and this is the second edition. And I think one of y'all mentioned that there's probably some updates from the time that Steve and I actually worked together, because there's so many questions and things that I had while working with Steve that seem to have got right into this book here. But as we go, and as you've noticed, a lot of how I trade, specifically is how I trade, is written down in this book. So let's jump into it here and let's continue on. We're in chapter 10 today. New traders give back profits by not having an exit strategy. Rich traders lock in profits while they are there. Now, that's one of the reasons that I'm so adamant on my exit strategy rules here, right? All of these rules, it's an anything happen type of thing, right? If any one of these things happen, you got to get out. You got to lock in those gains, right? And especially as the trade's working for you, in my opinion, you want to take that tolerance that you're giving it, right? Let's say you've got a $2 stop loss. You want to take that tolerance and squeeze it, okay? Because you don't want to see those winning trades turn into losers. That sucks. That's no fun. And that definitely hurts your bottom line, right? So one of the things that I like to do is once the stock is profitable, I'm no longer keeping that half ATR as my exit point, right? As my one stop loss point. I'm now moving that up. Okay. I'm moving that up to below the prior day's low once we've rolled it, right? Once we've established some profits are there, instead of just like, oh yeah, it's like it's up 10% or up 10 cents, I should say. We've got profits. I mean, you do want to give it some room, right? You go to the gym and you're doing some bicep curls, right? Not every single one is going to be the most perfect form going from 0 to 100, right? You're going to have some where you're struggling a little bit. Maybe it's going up to 10, maybe back down to 5, and then up to 20, right? Maybe you're struggling. It's still moving in that direction, but you're struggling to get it up. And it's like, oh, sweet. Okay, I'm at the top. And now I'm going to let it down. I'm only going to give it this much room to come down, right? I'm only going to give it 10% to come back down to say, okay, I'm out, right? You've got to be able to allow it to work, but also not cut off the trade, not choke off the trade. So let's continue on here. So the question here is, what would you suggest is the best way to lock in profits using a trading plan? He said, that depends on your trading plan, methodology, and system. Trend traders like me tend to take profits when trailing stops are hit. Exactly what I was just talking about. However, sometimes we have sell signals as the stock falls through a moving average, right? If it falls through the 10 for me, you got to get out of the way. Falls through a moving average, hits support, or hits a new low for a certain number of days. We always let profits run as far as possible. We want to give the stock an opportunity to catch the big trends. A trend trader must capture large wins to pay for all the small losses. Absolutely. If the last 4 times the stock increased 8%, 7%, 10%, and 12% in the 4 weeks prior to earnings, it would be prudent to take profits when the stock was up in that range, right? So if you trade into earnings and you've noticed in the last 4 earnings cycles last year, that's gone up 8%, 7%, 10%, and 12%, you know, in the couple of weeks leading up to it. That could be a great trade for you, right? But it would make sense, as he says here, to take your profits as the stock pushes up into that range. You could also set a stop if it retraces to 7% when it's up 8% or more. So if it goes up to 8, then comes down to 7, you could get out. If you're up 10% in the trade, the odds are that you already have all the profits you're going to get, and you need to start looking at taking them. So I'm glad that that came through, because this goes back to the topic we discussed last Friday, right? If all the profits are there that you're going to get, you need to start taking them. So if we go back to the last week or so, definitely some frustrating trades. And one thing that I noticed was going back through these trades that all of them had a really strong run up beforehand, right? And so I did some data back testing. I looked back and we came up with a new rule, which is if it's gone up 5% in the last 5 days, that may have already been the outlier move that we're looking for, right? If the move has already started, we're not trying to get in at the very top, clearly, right? So for example, FTNT last week was up 23% before getting in the trade. That's the outlier move that we're looking for. And had we got in when it was only up less than 5%, that would have been a way better entry point. So just a little rule. Mark mentioned in the Discord that the rules that we have here is just filtering out noise, right? And so it definitely will be helpful in the next coming weeks and years and months that we work together to have that in the bank. Dave says, that was a lesson I learned last week. Take the profits when they're there instead of hoping for a bit more. You can always hope for a bit more, Dave. There's nothing wrong with hoping for a bit more. The thing that I always say is, A, turn off your profits. That way you're not stressing on how much you've made and how much you've lost, but you're focusing in on your exit signals, right? If you've got your signal and you didn't take it, that's a problem. That's a huge problem. If you got your signal and you did take it, that's a great trade, right? Larry Height, one of my mentors, the first $1 billion hedge fund manager, original market wizard, he has 4 different trade criteria. There's good trades, bad trades, winning trades, and losing trades. You can have a good trade that's a losing trade, right? Because you followed your plan, you followed your signals. But you can also have bad trades that are winning trades because you just happen to get really lucky, right? You want to make sure every trade is a good trade. But the outcome, if it's a winner or a loser, can be random, right? You put everything in your favor, but at the end of the day, the outcome, where does it fall in the profit and loss spectrum? We can't control that point. We can only control where we get in and out. So by all means, make sure every trade is a good trade by following those entry and exit signals. Bob says, hopium always dulls the better instincts, for sure. Okay, let's get back to this. You had bad luck combined with an overextended profit. Oh, overextended. We learned about that last week, didn't we? And a failure to follow your trailing stops. Yes, all of the above. Well, that was a learning experience. That's what I say, right? You either win or you learn, right? That's not, I didn't come up with that, but you either win or you learn. There's this great book called Psycho-Cybernetics, and I would highly recommend picking it up. It's a self-help book, like a personal development type book, like a Tony Robbins type book. And one thing that it talks about is like, imagine you're shooting basketballs, okay? I'm not a sports guy, but imagine I go out and I shoot basketballs, and I guarantee you I'm going to start missing up front, right? But every time that I'm shooting those balls, I'm actually making small micro adjustments automatically without subconsciously not knowing exactly what I'm doing, right? I'm not saying, okay, if I give my index finger slightly more pressure, then the ball will go this way and get closer to the hoop, right? You're doing this over and over subconsciously, and you have, he calls it the automatic success mechanism. So you're either getting it right, you either win by getting it in the basket, or you learn. So you're course correcting, right? You're adjusting, you're learning. So the next time you shoot, you're getting closer and closer to the basket. And I think that definitely applies here, and really anything in life. You either win or you learn. And sometimes you need to have that kick in the pants to get you to, hey, this happened before, but you didn't notice. Maybe you need to notice this again. And in my opinion, that's kind of what happened last week. Well, that was just a learning experience. That's also how plane crashes happen. It's never just one problem, but a combination that results in catastrophe. There are too many safeguards in place for one thing to cause a catastrophic plane crash, which, you know, we talk about all these different things we do to safeguard ourselves, which is position sizing, which is knowing where you're going to get out in the chart, and of course, following those plans. You must focus on controlling your risk. When a stock moves against you and hits your stop or gaps down below your stop, you got to get out. This is your insurance against ruin. Your goal is not to be right every time. Your goal is to make money over the long term. This is accomplished by your winners being bigger than your losers and focusing on being right big and wrong small. All right, so series of rules here. Read your trading rules and trading plan every day. And that's honestly one of the reasons what I do love about having the strategy up here on the screen is you can just, not just you, but me, can go through and say, okay, did I do this part? Did I do this part? Did I follow this rule? Did I do this thing, right? And it's keeping myself honest. Never hope for a bounce back. Cut your losses at predetermined stops or trailing stop price level. Okay, so I'm going to get real honest with you here. Anything can happen in the market, right? So AEE hurt last week to take off, and it's almost back to where I got in. That sucks, right? But FTNT is down several more percent from where I got in, which also hurt last week, right? Both of these situations occurred. We can't predict, you know, it's a coin toss if it's going to go up or down after you get out. So if you come to a trade and you don't get out because you're hoping, where's it at? Never hope for, you're hoping for the bounce back, right? It could totally happen where it comes back and maybe you get out with a scratch, or it could continue on down, totally wrecking your plan. In fact, one of my favorite graphics I like to talk about on this is this one here from Mark, right? You buy here and it goes up and comes back down, which is what happens, knowing you should sell your stock when it does this, but fearing that it'll just turn back around and come back up. But what really happens is you get caught in a huge, huge loser. We've all been there. Trust me, we've all been there. The way you avoid that is by just following your plan, right? You never have to have big losers ever again if you just follow your plan. Always exercise discipline. Follow your predetermined trading plan. Don't overtrade. A successful trade is a trade that follows your trading plan and your system. Do not take a random trade, right? Who was that the other day? That Randy and Dave, Do not take random trades. If they don't follow your plan, do not trade them. Don't allow outside distractions during entries and exits. When you're trading, focus only on trading execution. So one of the things that has happened to me is as I'm going through, making my trades, talking through the trades, I can sometimes get distracted. And I have, on occasion, made some trading errors because of it. You don't have to do that, right? You don't have to sit here and talk to people as you're making your trades. You can sit there and focus and go step by step by step, which is what he's saying here, right? And I would definitely prefer to do that. But then again, I wouldn't be able to trade with you. So we got to make sure that you're following your rules and just focus in on the moments when it counts. Your opinion doesn't matter, only price action. It's kind of what I was saying earlier. Never try to predict, follow trends, trend reversals, and your signals. Never fall into the trap of hindsight. Instead, focus on real-time trading. Randy. Peter, I see your question. We'll come back to that after this. Always respect the market and don't become arrogant, right? It's critical that you learn from your mistakes as quickly as possible and that you try not to repeat them. Man, it's almost like Steve wrote this for us after last week's trades, right? You learn from your mistakes, make new rules, and that way you don't repeat them. That is, the timing on this is pretty awesome. The market gives you instant feedback about your performance, but you have to pay attention. In fact, that was one of the things that I said before was on BX, which was my worst trade of the year at that point. That one actually had ran up nearly 10%, and then it started going sideways. But I mean, since then it's gone up even further. But the outlier move happened here and over here. And I got caught in the middle, right? But if I had paid attention and said, hey, you know what, Chris, this trade was up nearly 10% before you got in, it might be a little bit too far, right? It might be a little extended here. So you have to pay attention. I missed that one. I missed that. Rich trader's tip. In trading, the money isn't made on the entry, it's made on the exit. The art of the exit is critical to a trader's success. Profits can disappear if you don't take them at the right time, and small losses can become big losses if you don't cut them short. Alternatively, small profits can become large profits if you let them run until they stop moving in your favor. And finally, keeping capital tied up in a trade going nowhere can cause you to miss out on a good opportunity. You must have a plan to get out of every trade you get in. Get out of every trade before you get in, right? Have those reasons to get out. Before each trading day, think about what you'll do based on where your trade is and where it may go. Exits are meant to minimize losses and to lock in winning trades for maximum gains. An exit strategy is meant to allow your logical mind to make decisions on how to exit before your emotions get involved. And the easiest way that I found to get your emotions uninvolved is turn off the stinking P&L. Doesn't matter. Does not matter what your open profits are. You can calculate your close profits after it's done. Does not matter what your open profits are. You are setting yourself up for an emotional roller coaster, good or bad, and you will absolutely leave your logical mind on the table and forget about your plan when you see the dollars changing. So turn off that stinking P&L. It'll make your life a lot easier. All right, to Peter's question. Is there a difference in a 5-minute order block and a daily order block? Does it differ in strength? So Peter, to that point, let's go to a chart here. We can go on BX here since it's got a order block right there. So in my opinion, I would say that the daily order blocks would be significantly stronger than a 5-minute order block. So if I go to a 5-minute chart, I mean, order blocks are so crazy, right? So you can see earlier today, it went up. It created this block here, created a second block right here. And then it went up into this area created the day before. Rejected, rejected, rejected. 3 times it was rejected. And then on this fourth one, it seems like it might be going through. And then it came down to this level, got pretty close, rejected, pretty close again, rejected. So it really is all about your time frame, Peter. Order blocks are so sick. I mean, order blocks are so sick. I can't believe how fortunate we are to have order blocks when 100 years have passed of trading and it wasn't right there, right? But just that's a perfect example. That order block was created yesterday and it went in and out multiple times. So in theory, if you wanted to trade the reversals off of that, right? Let's say you wanted to day trade and it goes up into this order block on that first red candle back down, you could trade that. And then again, first red candle back down, you could trade that. It's not how I trade. I'm not telling you to trade that way. But it really, Peter, all depends on if you are day trading, you need to be focusing on those time period charts that you're looking at. But you can layer that in, right? You might want to say, okay, I know on the daily, it's got an order block up here. On the hourly, it's free of any order blocks. On the 5-minute, it's got some order blocks here. So I would stack them personally, but just not how I trade. So that's going to wrap it for today. Let me go through the closing thing real quick. Thank you so much for being an outlier. We literally couldn't do this without you. We want to help you save time, make money, and start winning with less risk together as a team. Now, I'm not going to plug the current special because next week is our Black Friday sale. It's going to be going on all week, and it will be literally the lowest price ever offered for Outlier, which is going to be like if you're still on the monthly plan, you really should migrate over to the annual plan at this point because it's going to be that good. So next week, Black Friday will start. You definitely want to take advantage of that. Let us know if you need anything in the Discord. Peter, you are welcome, my friend. This is what I'm here for, is to help you guys out. Be sure to tell everybody about Outlier and hit the like button because I know you're already subscribed. And of course, have a fantastic afternoon. I'll see you right back here tomorrow, and we'll talk soon.